Hello everyone, welcome to the IchimokuCharts.com daily analysis for the US dollar index for Wednesday, November the 11th. Well, a green body candle today, and the size of this green body is larger than the body of the previous day. So compared to the previous day, that's telling us that the buyers have made a larger net bullish gain on the day, and that's a positive for this market. Now, the market has closed up towards the high. It's actually between the midpoint level and the high, which is telling us that the buyers have taken control of this market, although it's fairly weak control. They were in control when the market closed, but with only a weak amount of control. They did lose some commitment, and we can see that from the shadow on the top of the candle here, where the sellers came in and closed the market down below the high there. Below the candle, we also have a larger shadow on the bottom, and this was the market trying to trade down below this important 75 level, which is an important area of support, and it's held on a few occasions. And there was upside price rejection as the market tried to trade down through there and failed to close below there. The market closed at 75.10. So there is potential for this market to appreciate. And overriding that, though, is that the trend is still down. So even though we have some bullish signs, albeit not very strong bullish signs, the trend of the market is still down in the first time frame. We do have a lower high and a lower low, and that's a continuation of that first time frame downtrend that the market has been in for probably about a week and a half or 2 weeks. There is potential for this to be a Japanese candlestick reversal pattern, and it's the bullish engulfing pattern, and that's where the body of the current candle completely engulfs the body of the previous candle. And that's telling us that there is potential. We don't have that reversal pattern until we have confirmation, and confirmation would be a higher high and a higher low. So the high of the current candle becomes very important for this market for a potential reversal of this first time frame downtrend to the upside. Now, looking at the Ichimoku indicators, we are trading down below the cloud or the Kumo, and that's telling us that the market has an overall negative bias, and the market is trading down below the Tenkan-sen and Kijun-sen, and that's telling us that the market is bearish as well. Now, the Tenkan-sen and Kijun-sen are pointing down fairly sharply, and that's telling us that the market has some downside momentum, and fairly strong downside momentum in the short time frame and in the medium term time frame. When the market is showing some good downside momentum, the market does eventually correct. Not easy to tell when, but there's no correction at the moment that we can see based on the Ichimoku indicators. Perhaps the short-term dynamics are telling us that there is possibility for that, and the candlestick charts are telling us with that potential bullish engulfing pattern. If the market does correct to the upside, then we have these swing or these lows of these two candles here offer a potential area of resistance, and that was where there was buying coming in as the market traded down to those levels. And we know that previous support can turn into resistance, so anywhere through that region can be an area of resistance now for this market. And quite often the Tenkan-sen and Kijun-sen can act as an area of resistance for the market too, and they're trading at roughly about 75.80 roughly, or they're both in the same region. And that coincides with the swing highs here, where there was downside price rejection previously from these candles over here. If the market does trade up through there, then there's potential resistance in quite a large range, where there was strong downside price rejection around the 76.5 level, all the way up to around the Kumo or the cloud around 77. So there is strong resistance on the upside. Now, to the downside, if the downtrend does continue, we need to keep an eye on the low of the current candle for a potential for the downtrend to continue. And if that does continue, just panning out, we can see that there is support from a previous major resistance level at 74.31. So if the market does trade down to those levels, we need to look at the short-term dynamics and look for potential support around that area. So the market is in a first time frame downtrend, but there is potential for a change of trend based on the short-term dynamics, which aren't terribly strong, but they're not bearish, which is what you would normally like to see in a first time frame downtrend, and also based on the Japanese candlestick bullish engulfing pattern.